and looking forward to it. I know I checked Judy. I think you are signed up and ready to go to that event. It's going to be a good one. And Brenda, how are you? Mike, how you doing? And Les says, see you at the CBOE. So Les is going to that event as well. Awesome. Love it. Good morning, Robert. How are you, sir? So, what do you guys want to talk about? Oh, I love that. Judy says, yes, indeed, going to the event and anxious to see you at Brando's. Brando's will be one of the several fine Chicago establishments that we will be visiting during my visit there. Rose, I have one went out this morning. If you didn't get it, I'm going back through and making sure that I've got numbers corrected. Touring, yes, exactly, Scott. We will be touring the fine establishments in Chicago, guys. Obviously, talking about the morning lab reunion coming up in Chicago on the 24th, the 25th, 26th of August. It's coming up, guys. So if you're going to join us, get signed up now. You don't want to lose your seat. Those of you that are going to Markay and Jane, that's coming up even sooner. Make sure that you get signed up for that event. Learn to get your mind in the right place, because if you can't do that, it doesn't matter what else you do. It doesn't make any difference. All right. Got it, David, and I believe yours was one of the ones that I went in there to fix this morning. So let me know. All right, Levante, hey, what's going on? Man, other than a few texting back and forth, I haven't heard from you in forever. What you been up to? Can you pay for them? No, Christine, you can't. They're free. I'm writing something down here. Give me just 1 second. All right, so what do you guys want to talk about? The markets? Anybody want to talk about the markets? That's probably good, because the only other alternative we have is politics, and you don't want to get me started there. Let's talk about the market. Les just got TradeStation. Awesome. I love that. Brenda, all right, that's what I'm talking about. Brenda says, all right, let's take a look at Amazon, Chipotle, and Cummins. Interesting. So I haven't really looked at Cummins in a while. Mike says, looks like the S&P is near the day's lows. Possible breakdown, possibly, or a potential rally, right? We've been talking about it in the lab for a couple days here, how this breakout above former resistance, right, which the old highs were really up here around 2134, right in this area here. We've broken out above that, and we would expect at some point to come back and potentially test that. The breakout has been significant. The market has rallied, and we've been waiting for a little bit of a pullback here to give us an opportunity to get in. I don't know if this is going to be it or not. We'll watch the markets to see. We are trading at or slightly below, right at the lows of the day on the S&P. For the most part, the S&P today has been mind-numbingly boring. No trend whatsoever, just some up and down activity, and we're seeing that in some of the stocks that we watch. We saw Amazon rally off of lows this morning. Nice bullish engulfing candlestick. We played that. You can see right up here we are up, what, $14,000 on one of our positions. We got into a new position. We're up a couple thousand on it. So we've got some nice positions there on Amazon. Somebody said something about Chipotle. Chipotle we looked at, and it also has been mind-numbingly boring. Although the stock seems to have rallied to the 50 moving average and is not able to hold above that, and has sold off a little after that, but has basically gone sideways. The one thing that I am noticing in Chipotle and that I am paying attention to is that the stock seems to be putting in a higher low. Okay, so on this rotation, this last failure at the 50 moving average, they were only able to push it down to here. We've rallied from there, so we'll watch for that. A breakout above the 50 would certainly get me interested in a bullish position on a stock like Chipotle, stocks that have that kind of a chart pattern. We were talking about stocks breaking above their 50 today, and kind of interesting. Google, big breakout yesterday, pulling back a little bit today, possibly giving us another opportunity for some entries. Okay, Brenda says, yeah, today's market is like watching paint dry. We're watching your toenails grow. If you're watching your toenails grow, we have deeper issues we need to deal with. I'm just going to say it right there. Rose, those are still available in extreme charts. So you still have access to those in extreme charts. Denise, very good. Yes. So let's talk about Netflix, guys. How about Netflix? Absolutely got hammered on an earnings announcement that they beat on the top line, actually beat on the top line, met expectations on the bottom line, and yet the forecast was, and as a result, the stock is absolutely getting crushed today, down almost $15 off of yesterday's trading activity. What's interesting about this, as often happens, is that price activity brought it right down to an area of previous price activity. Call it an area of support if you want to. Does that mean we're going to bounce? No, it just means we're going to watch and see what it does, and we'll trade what it does. We did get in this morning. We did a synthetic long with a stop just below this morning's low. So if the stock does bounce, we're taking advantage of the bounce with a 1 delta exposure. If the implied volatility collapses, the position that we sold will go in our favor, while the position that we bought will go against us, and we'd effectively be net neutral on that trade. Okay, so it does kind of look that way. Brenda says Netflix looks a lot like LinkedIn when it had that huge gap. The difference is LinkedIn, if you guys remember, and those of you who were in the 5-day, this one was epic. It was so awesome. So we saw this huge gap up, all right, and then the stock has gone completely sideways. Well, what caused that gap? Exactly, Scott, our $1 million trades. Well, it would have been. What caused the gap up on LinkedIn? Anybody remember? They were bought out by Microsoft, right? So Microsoft came to the board of directors, and in their behind closed doors meetings, oh, I'm sorry, that's the Clintons. Microsoft came to LinkedIn and had a meeting, and they said, we would like to buy out your company, right? Well, company was trading at $130 a share. Well, nobody in their right mind is going to sell a viable company at 1 times earnings, right? I mean, 130 times. So that's effectively where the negotiation started. And they said, okay, well, we're not going to pay you, the whatever it is, they're trading 18 times forward earnings. We'll pay you 21 times forward earnings. The negotiations go back and forth, and they settle on a price of $189.50 is essentially what they agreed to do. So they would buy out every share of the stock for $189.50, which means that the company now ceases to exist as LinkedIn. It is now part of Microsoft, whatever they decide to name it, however they work that out. This one's done. This is finished. The only reason this is even still out here is the papers have not been completely signed and the transfer is not done, and there's a lot of back and forth and legalities that go on, but the stock is done. Netflix, totally different story. Okay, Netflix actually right now might be giving us might get an opportunity here on Netflix to actually see how this trade is set up that we've got. But if Netflix came out with earnings and they beat, so think about this for a minute, guys. They were expected to produce, I believe it was 7 cents on, no, I'm sorry, 2 cents on $2.1 billion of revenue, and they generated 9 cents on that 2 point. They were very efficient with their money. Okay, now next quarter they were the street was expecting them to produce 7 cents, and they came out and said we're probably only going to do 5, and that's why they got killed here. Philip says, why would you take such a long-term position this morning on Netflix? Okay, Philip, the position that we took on Netflix this morning was an option that expired this week. All right, so here you go right here. The July 22nd weekly option that expires this week. So you're right, it is kind of a long-term position because today is Tuesday and these expire on Friday, which means that we're going to be in it for maybe 3 days. The position that we took was a synthetic long where we went in and what we did is we bought the 185 call option for $1.64, but we sold the 85 put at the money put. And here's what was awesome about this trade setup, guys. This put option, guys, that we sold this morning for $1.14. Anybody remember what it was trading for this morning? How many of you caught what it was trading for this morning? Philip says, I assume the synthetic long would be for the long term. You know, you can, and typically that's what we do, Philip. But the reason that we did it is that I looked at this and I said, the stock's near support. It's starting to bounce. Let's buy a call. Well, this call option had like a 58% implied volatility, almost 60% implied volatility, and I knew that it was likely to go down. We bought it for about $1.80. That's what we paid for this one. Let me change that to $1.80. Anybody remember what we sold this one for? We sold this option over here for $2, and it was almost $2.14. $2.13 is, I believe, what we sold it at. So how much did our call option cost us? And Tarlo says, wow, you guys in the lab are always up to new stuff. We are. It's a lab. It's where we experiment. We try things out. Okay? So at the 85 strike, we actually made money on the trade. We got paid to do the trade. There's a margin because we're selling a naked put. I get it. And what we said is if we go below where we're at, we would stop out of the trade and just unwind the whole thing. We haven't really had to do that. Now the stock is starting to rally a little bit and starting to push a little higher on good volume. All of these are good signs. The one thing that concerns me is that while we are pushing a little bit higher and we are picking up volume, we are also in the middle of the day. Not my favorite time to jump into these. These tend to be a lot of head fakes. Okay. Jeff says, got paid 34 cents to do that trade setup this morning. That's an awesome setup. Here's the most awesome part about this. If the investing community decides, you know what, Netflix actually beat, not by a little, they crushed it on their earnings per share. 9 cents earned per share on a 2-cent consensus estimate from the street on 2.1 billion. So what that means, guys, is that they were very efficient in their money. And their management team's doing a great job of getting a return on equity for their investors, for their shareholders. Well, I don't know about you, but if I was a long-term investor, a company that beats on the top line, absolutely crushes it on the top line, meets on the bottom line, and guides a little bit lighter for next quarter, tells me that they may be possibly, doing some stuff right and setting the bar pretty low for next quarter. I like that. And if I decide to buy into this, and enough of my friends do, the stock will, in fact, go up. The stock gap down. Let's just say, as an example, that the stock doesn't, maybe it doesn't go up a lot. Maybe, what Philip said is right. Normally we do that synthetic long on a longer term position. Maybe this one, only for the next couple of days, goes up and it gets to, $90 a share. Well, y'all, we took a synthetic long at 85. If the stock gets to 90, we will make all $5 of that move. If it breaks down below this area here, we're just going to unwind the trade and get out. And oh, by the way, we picked up 30 cents of credit to do the trade, which means it could go down to 84.70 and we unwind the trade at no loss. Brenda says, why the huge gap down? Because people sold it. Darlo says, possibly an overreaction. Right? And so we're taking a look at this. We're seeing where it went. And then we're going in and we're taking a position, positioning ourselves with a risk-managed view of the market and saying, I'm willing, in this case, to expose myself to this stock. And if it goes higher, I want to take the profit. If it goes lower, I'll get out. Okay, so Philip, on this one, and guys, a synthetic long is one of a party, and this was kind of interesting this morning. If you guys are interested, we can talk about that too. A synthetic long is one of a family of trading strategies that involve buying a call, but financing the purchase of the call with a selling of a put. Okay, so let's just say we've got a stock that's trading at $102 a share, and you think that that stock is going to go up in price over the next month, as an example, which is what Philip was talking about. These tend to be typically longer term trades. You could buy to open the 105 call option. Let's just say that's a $2 option and has about a 40 delta. So you've got a 40 delta, it's a $2 option, and you've got about a month of time. It's slightly out of the money. What's the problem with this option, with buying this option? Yes, they will, VJ. In fact, I'll show you in just a minute how that works. It's all time value, right? So we're exposed to all time value. And if the stock goes sideways, the stock does not go up, but this stock goes, 103 and then down to 102 and then to 102.50 and then down to 101 and if it does this, what's going to happen to the value of our time? All the time value will go away, right? But we get that. We understand that. That's part of the risk that we take on when we buy a call option. What if the stock goes up? What is the problem with this option? You bet, Helen. Absolutely. Helen says, thanks for the aha moment. What an interesting synthetic long idea. So the problem is it's 40 delta, right? And so for the early part of the trade at least, you're only going to make 40 cents for every dollar move on this stock. Well, the other problem is you paid $2 for this thing. You paid $2. Yeah, that's not great. I don't know if I'm all that excited about that. What if I came out and got the market to pay me for that option, and I sold to open the 100 put for around, let's just call it $2. And in this case, I would have a similar delta because this one's a put option, right? And it's an out of the money put. So let's call this a 40 delta. So now let's take a look at our trade. Number one, how much has this trade cost us to do? Yeah, it's not cost us anything. We got paid $2. We used the $2 to buy the call. There is a risk and therefore an associated margin with our put because we are selling a naked put. So you would have to have the ability to do that in your account, and you would have to be effectively willing to go along the stock at $100 a share. But what you've done now is you have doubled your delta. You see, delta on a put option is negative, but when you sell it, it becomes positive. It's yours. It's like double negative there. So you have 40 delta and 40 delta, which means that now on this risk reversal trade, these two together have an 80 delta. Now, here's the part that's kind of cool. How many of you have ever gotten into a trade like this, maybe just buying a call option on a stock that looks like it's going to go higher, and it kind of goes higher a little bit, but it doesn't go high enough, and over the course of the week, it ends up here, and you end up losing all $2 because it never went above 105. Darlo says, yep, done it. Anyone else? Anybody else lost money buying a call option on a stock that didn't go up? Or is it just me? Apparently just Darlo and I. All right. Betsy says she knows someone. No, Betsy says been there, done that. Victor says knows someone. All right, look at this trade. Let's think about this for a minute. If instead of just buying the call, I go in and I sell a put and use the money to buy the call. If the stock does not go above 105, I'm not going to make any money on the 105 call option, am I? No, we all agree. But if the stock is at, I don't know, pick one, 104, we're not going to make any money on the call option, but is 104 higher than 100? In other words, are we above $100 the put that we sold. Huh. So how much would we lose on this trade if the stock ends up anywhere from 100 to 105? We wouldn't lose anything. We lose zero. We lose zero. If this stock is anywhere between 105 and 100, we are not going to lose a thing. That, ladies and gentlemen, is brilliant. We have mitigated our risk, but let me ask you this. Unlike a lot of other spreads, what is our upside potential? What have we limited our upside potential to in this risk reversal trade? Okay, Darla says $5. Robert says unlimited. Denise says unlimited. What do you guys think? David says no limit. Exactly. So between 100 and 105, we have zero cost basis, okay? Above 105 to infinity and beyond, we have unlimited profit potential, limited only by the amount of time in the option, right? Just like we would in a call option. And we begin to accumulate the 80 delta from the very beginning of the trade. So unlimited profit potential with a much higher delta than if we had just bought the call. Full disclosure, from 100 and lower, we begin to accumulate risk and potential loss. Okay, this is a risk reversal. And doing different things with the risk reversal, like bringing the two strike prices together. In fact, one of the things that we do in the morning lab, we will oftentimes sell a slightly in the money put to finance and effectively out of the money call at the same strike price, generating one delta exposure plus a credit on longer term trending positions. Now, if you didn't understand what I said there, it's okay. Those are fairly advanced concepts, guys, but this is the kind of stuff that we're doing in the lab. These are the kind of things that we're looking at. And what we did this morning on Netflix is exactly that. We just came in at the money and we sold the at the money put option at the 85 strike, bought the at the money call option at the 85 strike, and that generated a 1 delta plus a 30-cent credit. So now, if Netflix should rally and begin to move up into the gap, we will benefit from that dollar for dollar. Mike says, how often would you sell the 105 put as well for the essential 1 delta in this case? So, Mike, in the example that I gave there, and how you doing, Mike? I haven't talked to you in a while. In the example that I gave you, we were out of the money, which is kind of nice because it creates kind of this zero loss range, if you will, in here. That's the benefit to a risk reversal. The trade-off is you've got a slightly lower delta. What Mike's talking about is if I came in and instead of selling the 100 put, I came in and sold to open the 105, slightly in the money put option. I would probably bring in, let's see, so I'd be $3, so probably almost $4 there. Okay, I would bring in $4, more or less, and I would have a 60 delta. Pretty good how I did that in my head, right? Didn't even need a calculator. This would be an at the money risk reversal. That is called a synthetic long. Okay, so this position would be a synthetic long. It is a 1 delta position, and I'd be getting paid a $2 credit in this example. The risk of doing that on a short-term basis Mike, is that you get put the stock, right? Because you're selling in the money put. So there is a risk in there that may happen. So just, as long as you're aware of that risk, in this case, you could set it up as a risk reversal and not be exposed to having the stock put to you. Richard says, would you scale out if it goes up significantly today to further reduce your risk? You could, Richard. One of the things that you could do is to do what's called delta balancing, right? So you would, if it goes up, the put delta would go down, right? Which means that you could take one put off the table and still have the same delta exposure because the call option deltas will be going up. That's very advanced. Philip says under 100, the delta stays at 80. Yes, the delta will stay at 80 throughout. In this trade, the delta stays at 80 throughout the entire trade, up and down, right? Which just makes sense because look, if the stock goes down, the delta on the put goes up. Well, we sold that. We don't want that to happen, right? And if we bought a call and the stock goes down, the delta on the call goes down, right? So this one's going up, this one's going down. It's working against us. If it goes the other direction, the delta on the call will go up, the delta on the put goes down, and that's what Richard's talking about. Could you actually mathematically scale out of your risk reversal, reducing your margin and your exposure to the naked put as it goes up? And yes, you can. And in fact, Richard, if you'll ask me that tomorrow in the lab, I'll go through and show you how you would do those calculations to figure out when it's time to take one put option off the table, buy it back, and maintain that delta that you've had to a degree. Okay, Richard says, love it. I do too. It was kind of a cool way to trade it. A little unique, a little different. Now the stock's basically going sideways, not a lot going on. A lot of stocks are going sideways. Here's a couple that I'm going to leave you with before I turn you over to Markay and have her share some of the awesome stuff that she shares with you. Priceline. This morning, okay, we actually got into Priceline yesterday on a day 2 bounce off of the 10 moving average. Great move yesterday. We had some great profit in it, about $5,000 by the end of the day that we had on that. But the stock gapped down today, and it gapped down, and it was great. I wish those of you that were not in the lab could have been there for the commentary, because as the trade progressed, we get down here and people are like, oh my God, this is horrible. We got to get out. So we looked at this, we said, well, maybe, but let's go look at the chart. Well, guys, that happened on the daily chart right here, right? Well, what's going on right there? It's a 10 moving average. Well, our stop is on the other side of the 10 moving average. So we didn't have any reason to get out yet. We said, okay, fine, we're not going to get out. We looked at some hedging opportunities, and the stock actually started going up. So we said, okay, we'll wait. And then it did it again. Don't you hate that? Came right back down. We're like, oh my God, this is awful. We got to get out. And I love it because Brian, who is a member of the lab at that time on this second sell-off right here, he said, man, this feels really icky. That's a technical term that Markay often uses. This feels really icky. I don't like it. This is uncomfortable. This right here is really uncomfortable. That means that it must be a place for us to add to our position. So we did. And now, from there, about 13.25, we're now trading at 13.36. We made a pretty nice move off of that low, bounce off the 10 moving average, something worth watching. If you're looking more towards the bearish side of things, check out Baidu today. We talked about it earlier yesterday in the lab, mentioned it briefly this morning. Beautiful day trade setup here as the stock broke below the first 5-minute candlestick and then has just trended lower all day, sitting right at an area of support. The stock does seem to be finding some support right around 160, and it is doing it consistently. So either I will look to fade this by buying some calls if we can bounce, or if we break below that 160 area, what I am noticing is that the stock seems to be putting in lower highs and seems to be under some pressure there. Carolina says, I'm getting sweaty hands just thinking to be in that Priceline trade. Yeah, they're fun. Diane says, yeah, it's a double bottom. Judah says that's an H pattern on Priceline. Okay. What does that mean? Is that good? I mean, so far it turned out pretty good. So, H pattern, a W pattern. Here's how I look at it. It bounced at support. The great H pattern. All right. Very good. All right, so guys, that's just a couple of them that I'm looking at, some things that I've been watching through the day. Markets are actually pretty quiet today, so we're just kind of looking to set up, manage positions. It is summertime, so we do need to be aware that we may be going into the summer doldrums here where there's not a lot of activity, and today definitely feels like one of those days. And you know what I do on days like that? I leave, which is what I'm getting ready to do. All right, that's exactly where I'm headed, Scott. Got another match this weekend, our local match, so I'm going to head to the range, make sure my gear's all cleaned up and working from last weekend's running around in the 100-degree weather of Texas. Go boating. It's cooler, Sally says. I like that. Absolutely, Levante. My pleasure. Demetrius, another one. How are you doing? Um, You know what we do, Demetrius? If you're interested, just give us a call and we'll get you taken care of on the monthly subscription to things like the labs and the trader talks and so forth. Yes, Scott, that's what I'm going to do. So, guys, that's what I've got for you. Let me do this. Let me go ahead and turn you over to Markay so that you guys have an opportunity to see what she's looking at and learn from one of the greatest instructors and one of the best traders I've ever met. Truly an honor and a privilege to occupy the same stage, whether it's live or virtual. So you guys take out your pen and paper, take good notes, pay attention, and let's go ahead and bring Markay Latimer on board.
Hi everyone, how are you guys? All right. There, all right, good morning. Yes, it is still morning here for some of us. 2 weeks away, Scott says. Is that it? Let's see, we've got, now I gotta pull up my calendar. You aren't kidding. In 2 weeks, the Orlando event with Jane and I. Yeah, if you guys haven't signed up, let us know. Come and hang out because it is going to be fun. It's it's going to be a great event. 2 days we'll be charting and working on trading, and we'll have Jane there. There you go. She'll be going through, giving you all her words of wisdom, looking over your shoulder, a little counseling. There you go. All right, you can hear me, Denise? All right, yeah, I know. Mike says not morning for a few of you on the other coast. Correct. All right, so, and Levante, it's good to see you here. All right. Oh, so Robert, you were supposed to have gotten a call. Let me give you a call here. I'll tell you, if you guys have well, yeah, so let me know. I talked to Robert last week. I mentioned in one of these online classes that we're going to do a real super discounted price if you have let's say a partner or spouse that wants to come to the event for the Jane part of it, for the wealth psychology and whatnot, but who isn't a trader. So we've got a couple people taking advantage of that. And so Robert's curious about that. So let me give you a call, Robert, but if anybody else is interested in that, give me your number here and let me know, and I can reach out to you. Either Sylvia or I will reach out to you here today and get it set up, just so you know and you can plan. So I apologize that did not happen right away. But yeah, if anybody else is interested, let me know. We'll get in touch with you guys, just because it's kind of, it sort of came up talking to actually Jeff, and his wife does not trade, but she likes the idea of some of the stuff that Jane will be going through with the wealth psychology. And I hate for those people, to miss this opportunity, because Jane is not coming back anytime soon. I can tell you that much. It's super expensive to get her over here to the States. She lives in the UK. She is very, very busy. She travels around the world teaching traders. I'm not sure primarily, but she does a lot of coaching and instructing with traders. She herself is a trader. But she also goes in and helps people that are starting businesses, entrepreneurs, current business owners that are growing their business. so on and so forth. Thank you, Amelia. I'll get in touch with you. But yeah, so it's just those people that, you know, are in kind of that, with that mindset and wanting to learn more about the wealth, you know, psychology of money and wealth and how to handle things. Because we don't know. I mean, think about what is the biggest cause of divorce? It's money, right? I mean, there are just all sorts of problems that come about with that. And so I figured we've got quite a few people in that camp with maybe partners, spouses that don't trade, that might make sense to at least let them come and join you in Orlando. Yeah, for a really good rate. All right, so I'll get in touch with you there. So if anybody else is in that camp, let me know. But yeah, the event is just over 2 weeks away as I look at the calendar. It will be a Thursday, Friday, August 4th and 5th. I'd love to have you guys there. Like I said, it's just going to be 2 really packed days with trading, practice trading, charting, really refining your skills, and a lot of solid information from Jane that truly will be able to help you in all aspects of your life. And so that's what we're working towards on those 2 days. I'd love to have you there. In the meantime, oh, can you see my screen? Maybe I should make sure. Possibly. Joan's asking if we're going to record it. Possibly. Working on that. I would say don't not come. I think we may record it, but if you can't make it, if we can get that worked out, that would be an option down the road. I will keep you posted on that for sure. You can see my screen, can't you? I'm not getting. Okay, perfect. Okay, there we go. All right, so let's do this. What do you guys, I know Bill was talking about Netflix. Look at that. Our nice little gap down trade. It's interesting. Sometimes after earnings, you'll have some great day trades. And we didn't really get that momentum push up or down on Netflix so much. But what I really love is this idea over here, what Bill was talking about, where Netflix is down at a support level. And you could see it after hours trading at that level too last night. So anyways, so it's pretty cool for some potential going forward. I love the trade that Bill did. Let me show you another stock that we could look at here. How about good old Goldman Sachs? You guys paid any attention to this stock? I don't know if Bill talked about this. He may have. But they announced earnings this morning as well, and not S, but this GS. How's that? So they announced earnings, and they've had a couple quick trades. And this is a good example of why after earnings, if you're trading that day after earnings, if I'm doing just directional calls and puts, I really like the idea of day trading, because sometimes there's a lot of volatility out there, and you see it illustrated here real nicely in Goldman Sachs. So as I just zoom out here for a second. Sorry, let me back this up a little bit. Okay, so here's our early morning volatility, gap down, a lot of choppiness. You start to get some bearish moves, but only for 10 minutes. And then it popped up and completely reversed. And honestly, I kind of liked this area when it started moving above the first 5-minute candle. And you had this big momentum push. So there were some opportunities here. Now, was this easy trading right after earnings? Did any of you try to trade this or do anything here with Goldman Sachs? Yeah, Sally says, no, not easy. It wasn't super easy because we had all that volatility. It was down, gapping down, up a little bit, but not even for 5 minutes. Then selling off for 10 minutes right here. Then we had 15, 20 minutes of rally that basically brought the stock up to, if you look at the daily chart, look at that rally. Let me come over here. Bring in my drawing tool here just for a second. Million clicks. Here we go. So looking at the daily chart to see what happened on that rally, that's supposed to be a horizontal line. That stock came right up to a resistance that was created yesterday. So This is what we got out of this rally this morning, right here. This stock came up and hit the high from yesterday. So there were technical levels here to trade, but it was a lot of volatility early on. So the piece that I actually liked quite a bit is where it came up to this beautiful circled area. Yes, Scott. Watch this, and there's an arrow. Came up to this circled area, created a double top, and then you can see here on the 5-minute chart started selling off. And this time we were kind of far enough into the day that you could see volume had started decreasing a little bit. The stock consolidated in almost a wedge type pattern. When it broke down below all that consolidation, volume started picking up as well. This was a nice bearish entry. The early stuff was difficult to trade until we came up to a level on the daily chart that made sense. And that double top holding right there as resistance, that became kind of a nice tradable area. And then you look at this on the 5-minute chart, this is where we finally moved into somewhat of a consistent trend. And so we've had Goldman Sachs selling off here until just recently, right in that area. And what just happened on Goldman was that we moved into a double bottom. So the stock sold off, came down to a new low, retraced, could not make a lower low right there. And so really within the last, 7 minutes or so, when Goldman Sachs formed this bullish engulfing candle at that point, that would have been an exit out of a bearish trade. I think a likely entry would have been over here and an exit on the double bottom bullish engulfing. So you're going to see this around earnings season. And now that we're just really at the very beginning of this, we're going to see more and more companies announcing earnings. And I think that's going to be an important part of how we're going to trade for the next few weeks. So like Netflix is a post-earnings trade where Netflix gapped down. And as far as real true day trading with calls and puts, there hasn't been a lot of momentum there. But then Bill's brought in that synthetic long strategy because of where it's positioned on the daily chart. So that's a great way to go. And you will see stocks that will gap and sometimes flatline and don't do anything after earnings. You're going to see stocks like Goldman Sachs that sometimes start out really choppy, continue to watch for signals primarily off of that daily chart. And it's the same thing that I always say, watch that daily chart because your stronger, better signals will come from there. You're just like the thing with Netflix that makes that a strong signal is that it's at support on the daily chart, just as Goldman Sachs came up and threw a tweezer top right here on the daily chart. So now David's saying with this entry, let's say, so we do this trade, you're buying puts here, it'd be, we'll call it 163.50, that's about right here. So 163.50 or so, out around 161. You're talking $2.50 up to maybe $3 of movement on the way down. We all know you can make money with a put option with a stock that moves from $2.50 to $3. So would you now take your profit and switch your trade around and buy a call option? Because a lot of times if you're selling your puts, the reason of selling those puts is because you think the stock is going up. So if you think the stock is going up, would it make sense to change the direction of your trade and turn around and buy those call options? Denise, I love it. Denise said, well, not during lunch. And see, that's the problem, the time of day. Now, I have just finished eating breakfast, but some of you on the East Coast are moving into lunchtime. And this is where the markets slow down. So as we know, we head into that, East Coast lunchtime hour, European markets close, trading volume dries up a little bit, and things slow down. And this is the time of day that we will get those Bollinger Band pinches and things trading sideways. So is this the time to jump in and reverse into calls? Maybe not right at this time, more because of the time of day than anything. Now, the other thing, too, you look at Goldman Sachs on the daily chart. Is this a great bullish entry on the daily chart? What do you think? Let's do this. Mike is coastless. That's true. You're kind of in the middle-ish there. All right, let me show you this. Let me jump over to erase these lines. Yeah, let me jump over to extreme charts. Only because this is where I like to keep my lines. And one thing I was going to show you, Scott mentioned this earlier, Goldman Sachs traded almost up to the 200 simple moving average on the daily chart that you see right here. So it's another thing to keep in mind. So another reason to have moved into the put side of things. Now, is it time to buy calls because of lunchtime? Probably not. Just because we could see Goldman Sachs slow down right here, and it could break down and sell off more into the close, right? Have you ever seen anything like that happen? We've seen it before, I know. And then another thing, if we get through this slow lunchtime, low volume kind of break that the markets tend to take every day, look at where Goldman Sachs is on the daily chart in relation to a 5 exponential moving average. Now, here's the thing, we don't yet know if that 5 is going to hold the support, but it is worth noting that we've got post-earnings sell-off. It hasn't been that huge so far. The stock is trading close to that 5 exponential moving average. So by the time we get to this, beyond lunch kind of slow window, if we see that Goldman Sachs is starting to rally, and if it's trading above the candle body in this area, would this be worth considering, especially above the opening price? Would this be worth considering a bullish entry? It might be because it's close to that 5 moving average, but now you have to remember it's a stock that is between a resistance and a support. So it's kind of a short-term swing trade, which fits in perfectly with post-earnings stuff anyway. All right, so let me see a couple questions here. David's asking, how long do you usually have this low volatility? It could be an hour. Sometimes it's 2 or 3 hours. It really can depend on the day, but it almost always starts happening by couple of hours into the market. 2 hours to sometimes 3 hours where you start to get that, and then you'll have usually a good hour of things being slow. Sometimes you'll start seeing breakouts at 1 o'clock Eastern. Sometimes they don't really start happening till 2. So it really can vary on the day, which is why it's important to do what I do here. You could obviously find out something that works for you, but I have a tab here that I will start going through, bring these out, and putting my stocks that are moving into Bollinger Band pinches on. So obviously Netflix will stay here in this window. By the way, because of earnings, those bands are so wide apart. See how scrunched down the data gets? So instead of looking at this, that's not going to help me. I zoom in so I can actually see what the candles look like. So they're clearly in a pinch. They may or may not break out this afternoon. But I've got Netflix I will leave there. Deere is in a pinch. IWM, I'm going to take that off and replace it with a stock that is moving in a pinch. Apple and Spiders are kind of developing that, so I'm going to leave them there. Priceline actually trying a breakout above the first 5-minute candle body. That's interesting. So I take it off of this chart, by the way. We'll look at Priceline in a second. And Baidu, you notice Baidu has been doing nothing but selling off today. So, but it's not a pinch. So I keep this page dedicated to stocks that are moving in those sideways patterns, in those squeeze plays, so that I can come back and glance at this page. Those of you with your multiple monitors, you can have just set up on an extra screen and then just glance over there now and then. And remember, all you're looking for on this page is a Bollinger Band breakout. So these are my stocks moving in a pinch so far. Let me come back over here because we talked about a couple of things. Baidu's selling off all day, and then of course the Priceline breakout. Baidu makes sense on the daily chart. I probably better talk about Priceline first. The Priceline breakout also, does this make sense on the daily chart? Have any thoughts? Yeah, Denise says yeah. Probably. Because look what it did. It came down to that 10 exponential moving average over here on the daily chart, and it's starting to bounce. So there you go. I love it. A lot of you guys catching that. So it came back to the daily chart. We've started a bounce. This one is a little bit different because they did move into a squeeze play earlier, and you notice where we're at. Their breakout happened right, I mean, not when it should have, right? This is why you can't trade according to the clock. You do to a certain extent, but then you've got to add in your candle patterns and use your intraday charts to help you with the timing. Because here we are heading into lunchtime. You could see the price line was moving in a pinch. It broke out of that squeeze play right here. What about 9:10 or so? So, or that would be Pacific time, right? So just after noon, it broke out above that upper band, leading to a big momentum play. Now, on this case, would you say, no, I can't trade that because we're in lunchtime? You look at the chart, right? And what is the chart telling you? On the breakout, are the candles getting bigger? Yes. Or I should say, is volume getting bigger? Yeah, volume's getting higher. Candles are getting bigger. So these are signs that tell us, yeah, this is a breakout that is more tradable, right? And then we've had this upward momentum. And I like where price line pushed up again, up above the upper band a few minutes ago. It made it above the opening price today. Just put my crosshair here at the top of that very first candle body. So we had that breakout. It's already starting to retrace. On breakouts like this, where it breaks out one candle and then starting to pull back, let's watch this and see if there's an opportunity to trade it as that intraday trending pattern that we see, where maybe price line will come down and bounce around the 10 moving average, and it'll give us an opportunity to enter here at a lower price point, which, as you know, especially on a stock like Priceline, is much better than buying calls right here on all that momentum, because buying those calls right there end up being a lot more expensive, right? All right, so let's see. Let me catch up to the questions here. So I had a whole bunch coming in then. Okay, so we talked about the reversal, got the breakout on Priceline. Tom had asked, do I always buy sell options in the money? It depends. On Priceline, trading this, rarely would I go in the money. It's because it's just the price. It's so expensive. I generally either go one strike price out at the money or one strike price in. One of those three options. And it depends on how much time I plan on being in the trade. The less time, the deeper in the money you want to be, right, as a general rule of thumb. So one of those three, depending on the strategy and the reason for trading. Yeah, and with the moving average pinch, Denise, the play is you're waiting for a breakout of the bands, right, above the upper band or below the lower band. And what will happen to help confirm those breakouts is a lot of times your moving averages are going to cross. Like you see right over here. See how I have a 10 and a 20 moving average here on the 5-minute chart, and those averages crossed here as that momentum started picking up. We see those moving averages crossing, basically to confirm that breakout. So this is a pretty nice looking daily chart that we have on price. Now another thing, have you guys factored in when their earnings are? Have you guys checked this? More reason to be excited. Do you know why? Let me just show you. You know how I like to put the dates on my charts just to make sure that I don't forget. So guess what? Priceline has been confirmed now. It will let me click on that. There we go. Priceline has been confirmed. And guess when it is? I'll give you a clue right there. August 4th. After market, so this is Thursday night, the day that we are going to be, it's the first day of the class with Jane. So this will give us something to trade Friday morning. How cool is that? So check it out, because I'm just seeing it confirmed August 4 after the close. So this is something that this will give us a chance to practice Priceline the day after earnings. And, you know, they may gap and flatten out like Netflix. They may not. They may trade more like a Goldman Sachs. So I'm excited for something like this. So we'll practice this for sure in Orlando. So another reason to come hang out. I mean, you know, some of these trades, tell you what, you learn to catch some of these moves, and it can be thousands and thousands of dollars profit just off of one trade. Because the price, I mean, the price for Orlando, that'll by far cover that. So I have to ask Sylvie where we are on pricing, because the pricing for Orlando was $1,200. Well, it was the regular price is $1,495 for the 2 days with the Jane Cox, Wealth Psychologist, and myself. I'll call myself a psychologist of charts. How's that? And we're not. So yeah, the two of us together, $1,495, and the price, we had some. I'm trying to remember how the generation of pricing went. Those of you at TSS in May that signed up early were given a pretty decent price break, but now the price has gone up to $1,295. One thing I will do, and this, Amelia, if you want to take a note of this, just because I'm so excited about Priceline. Yep, here you go. Mike says, I can hear you rubbing your hands together. I can't help but I do it when I get excited about trades. Every time I start rubbing my hands together, my kids will run up, what, Mom, are you making money? And they'll look at the charts. All right, so yes, because I'm excited about Priceline, I'm rubbing my hands together. If you guys have not signed up yet, let us know. You can give Amelia a call, and she can help get you taken care of. But anyway, one person, I'll tell you what, I'll go back to that $995 price just for today, and then after today it's $1,295. So that's still a markdown off the $1,495 regular price, but if you guys want to go, there you go. Amelia said absolutely. So she'll take care of you guys. Awesome. Thanks, Amelia. Scott is saying, did I hear $495? I think, Scott, you heard $14.95 and double for you. All right, but no, for you guys that if you haven't signed up yet and you want to do it for today, let's do it at $9.95. Amelia agrees, double for Scott. Sorry, Scott, what can we do? And then don't forget, if you have we have partner rates as well for, you know, trading and non-trading partners. All right, how's that? There we go. But I'm excited now. I didn't even know this. So it just was confirmed today. When I last checked over the weekend, they were still unconfirmed. So confirmed August 4th, Thursday night. This will be a stock we'll be looking at trading post earnings on Friday. Awesome. Let's see. Mike, I love it. Mike says, charting greatness, psychological brilliance. I won't say it. He says, two lovely ladies. I'm there in spades. All right, I know it. I love it. I can't wait to see you guys. It'll be so fun. And Levante is calculating the math for you, Scott. I could tell you guys would get along well. All right. Let me see here. Let me catch up to the questions because I know there were some other stocks I wanted to look at as well. Let's see. We got. I love this. Lots of chatting, but then I have to dig into the chat for a second. Yep, we got precedent. Okay. Oh, Boeing. Darla wanted to check out Boeing. You can check out Boeing, SWKS, sure. We got all sorts of things to look at. All right. So, and there's price sample. I'm back to the moving average. This will be one to watch to see if it can bounce there. SWKS is a stock that comes up on my scans from time to time. And we've had some momentum moves with this recently. Now it's starting to, you know, you look first at the daily chart, right? On the daily chart, it's a little bit overextended there. On the intraday chart, now look to the left, on the intraday chart, this is moving into a nice Bollinger Band pinch. Now, sometimes off of these, you'll actually have a bearish sell-off, not always, but sometimes, as the stock starts to retrace on the daily chart. Then you also can spot it here on the intraday and the 5-minute. But we're dealing with, trying to see what their earnings are. Let me jump over here. So the 21st, so we've got 2 whole days. So now, what do you do with something like this if you're trading, thanks Scott, if we're trading Skyworks today, if you wanted to trade a breakout, how would you trade it? Or would you? Any thoughts? There we go. Teresa's saying day trade. So you basically have just a few days here, right? So you can hold overnight, you can go into a swing trade, but it's got to be a short-term trade. Earnings Thursday after the close, you have half of today left, all of tomorrow, and all of Thursday to trade. It gets, at that point, it becomes hard as a brand new entry to start holding overnight, because one of the things that happens with the stock when they're running into earnings, if they're moving one direction, you will often see some kind of a pullback or a retracement. Have you noticed that? So let's say we have a lot of momentum here. Let's say a lot of bullish momentum. And then if things start slowing down and retracing, we get maybe some decent amount of a pullback going into earnings. It's a pretty typical pattern that will happen fairly often. So I get worried about holding overnight when we're running out of time. So it becomes almost more of a day trading stock than anything. And then Thursday, if they're announcing after market Thursday, this sets up for a nice potential post-earnings trade for us on Friday. So this is absolutely a stock that you need to be watching for potential breakout here on Friday after earnings. All right, so another one, I had a question about Boeing, and what do you guys think about Boeing? Definitely some momentum this morning, right? I mean, Boeing is one of those weird little stocks that can be choppy, but every once in a while you get these great momentum moves. And this morning was phenomenal. That first 5-minute candle, you had a breakout of that first candle body at 133.74, and it pushed up to a technically perfect Bollinger Band top. Right here, this is slow falling over, great Bollinger Band top area. This would have been, of all things, a great little day trade. Now look at the daily chart. Are they a little bit overextended here? It's coming up to a resistance on the daily, and exactly, Mike's saying right here on the 5-minute, it's a line pattern. Check this out. Tight little rectangle. Nice, it's called a line, where the stock is just sideways for a whole bunch of candles. Now, you treat it, if you wanted to trade this, you treat it like a rectangle in a way, where you recognize the line, you find where support and resistance levels are, and you wait for a breakout. Now, because of where the stock is on the daily chart, I'm kind of hoping for a downward breakout, right? Only because the daily chart, the stock is more at a resistance level. So this is something that you want to watch and could potentially give us a bearish breakdown trade here. Now their earnings are coming up, but not until next week. So they're on the 27th. But I like where we're at here on Boeing this day. Ah, yes, and Apple. Of course, we have to talk about Apple. Let me show you. I've got my 200 moving average over here on extreme charts. So look at Apple. Mark was bringing up Apple. They've had a big momentum push here, and they have, especially the last, I don't know, it started back here last week on Thursday. We had a big breakout push. Until then, it was moving higher day after day. Not a lot of momentum. The momentum picked up last Thursday. Seems like every other day we've got these nice little rising 3 patterns forming. So today happens to be a little bit of a retracement day on Apple. Watch what happens this afternoon. And you may have noticed when I first switched over to the chart, I still had my 5 moving average on. It really has been the 5 moving average that is holding the support. So something like Apple, I look at this and think, well, if the momentum picks up and if the markets continue to trade bullishly, if this becomes a rising 3 pattern tomorrow, there's another bullish entry on Apple. And we are trading into earnings next week. But yeah, that one's kind of a cool little pattern there. Let me see, I had another stock I was going to show you guys. All right, if you ask a question about a stock and I missed it, it's not on purpose. UVXY, maybe that's it. So if you had it in there, type it in again and I'll check it out. Something like UVXY, check this out over here. This is it's an ultra short, and you could trade it like a stock. You always have to look at the option pricing and make sure it makes sense, but it's going to move opposite the market. So as the markets have been more and more bullish, this has been more and more bearish. So this would be something, at this point, trading around $6.49, it gets hard to buy puts on it because there's not that, it can go down another $6.49, but that's it. Where I like some of these is when the markets break down to trade some of these on the bullish side if we have some kind of a reason to do so. We haven't had that yet. It's in a downtrend. I would look for a clear double bottom, maybe bullishness on the Bollinger Band, something like that to go to a bullish trade on a stock like this. Oh yeah, lots of stocks moving right here. We've got Win. They had, we're starting to see some volatility here. Did you notice Win yesterday with that great breakout, really strong breakout candle that came right up to all this consolidation, and then today it slowed down. Now they may be announcing earnings during the Jane event. Let's see, it's still not confirmed, but they might be Thursday night of that event as well. So we'll look for this, but we've started to see that, or started to get almost a beginning of a breakout yesterday, and it failed. So that tells us something, that it's not quite as strong as it was. The other thing too, whenever you're trading Win, you want to look at Las Vegas Sands because they're announcing earnings before Win, and Las Vegas Sands earnings absolutely can affect Win. So don't forget that. So I have Las Vegas Sands, unless that changed. I'm still showing them on July 27th. And then we've got Amazon, which, Amazon, let me switch back here. Amazon had been a neat retracement type of a stock. It had been more bullish than the overall markets. Okay, so it's been one of the stronger ones. And then lately, it had been pulling back day after day after day. So here we had 4 days of retracement, traded right down around the 10. I was watching for some kind of a bounce yesterday, and it ended up being really volatile. So spike up, spike down, but not, by the end of the day, not a lot of clarity. But this was still, it's there, it's around the 10, starting to look like it's trying to bottom out, but still a doji. So this could have triggered some entries, like Lisa's saying, yeah, an entry yesterday. Today, follow-up bullish entries on Amazon, because after all those retracements, what we're starting to see is that 20 moving average holding as support. And you could see that happening right here at the open. Big gap down initially, followed by a whole bunch of bullish momentum on those first 5 minutes. So Amazon, it's trying to attract the buyers, and the daily chart here is bullish for right now, as long as it stays above that 10 moving average. I like the bounce off the 20. Now I think if it could stay above the 10 by the close today, it's going to be looking a lot more bullish. If it drops back down under the 10, yeah, it's still bullish in a way because it's above the 20 moving average, but less so. Does that make sense? So to me, the stronger stock on a bounce off of a moving average like we had yesterday and this morning, this should be able to stay above the 10 moving average. And that's when it does, that's where you want to stay with your bullish positions. And watch, as the markets are slowing down here, Amazon is slowing down as well. We have really, 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 really low volume. And we're getting smaller candle bodies right here. So I'm curious to see if they're going to move into a pinch. Maybe if we'll see some kind of a breakout here this afternoon. Back here, yeah, Philip asking about this bearish engulfing. Was it tradable for puts? And yeah, it was, because it had gone so far. It was kind of a little bit beyond where the S&P had gone, and you see that follow-up retracement with a bearish engulfing. That stuff is tradable, certainly, as long as you do it knowing it's a retracement trade, right? All right, and so yeah, so Lisa, yeah, you've got one call overnight. There will be some time decay from tonight to tomorrow, and this is where it kind of, this is where your time, it seems a little weird, but your time decay will be less if Amazon starts moving. If it stays slow, I feel like they just pull more out. Have you guys noticed that? But if Amazon, if they stay above the 10 moving average and keep pushing higher, I wouldn't worry so much about time decay from a Tuesday night to a Wednesday. Wednesday to Thursday becomes even more. Thursday to Friday, obviously, even more. But things like this, I watch it in the afternoon. I want to see if we're going into a strong close or if things are weakening. And if you have a trade that is concerning you, look at the charts and say, if I didn't have anything now, would I want to get in? Would I want to buy this now? And if your answer is no, you look for places to scale out, sell, get out of the trade. Or if your answer is yes, then you can hang with it. And if the chart dictates, you can even add to that position if it makes sense on the chart. But right now, the line that I like watching on Amazon is that 10 exponential moving average. And yeah, Lois just brought up Facebook. Facebook was awesome the last 2 days. This morning, phenomenal. Yesterday, unbelievable. And Facebook is right in line with what I teach about waiting, being patient, and waiting for the patterns to develop. In my classes lately, I've talked a lot about where the S&P was pushing to new highs, waiting for those stocks or trying to find those stocks that were lagging the S&P a little bit, somewhat like Facebook. We have done some amazing trades off of the trader stock just on stocks that have been lagging. So meaning if the S&P is at new highs, you can't be buying a stock at new highs because who knows how long they're going to continue to move higher. But Facebook had retraced in a little bit of a falling three pattern, and they traded down around the 10 moving average. So this was a candidate heading into the market this week based on whether or not that 10 moving average would hold as support. And yesterday it held beautifully with a gap up, a retracement to the 10, and a nice strong bounce. Oh, I love it. Christine saying I did a paper trade yesterday on Facebook based on your entry point. And how did it work out? Obviously pretty good. It was up 250 yesterday, right? Up another buck, well, more than that now. It's trading up at, buck 20, or at 120 right now. So yeah, Christine says, awesome. So we've had some nice momentum moves off of that 10 moving average. So yeah, so anyway, this stuff I love. Now, is this the time to jump in and buy calls on Facebook? Mike, you just beat me to it. Look at the long-term chart. Probably not. First of all, it's up, 2 days in a row so far, so we're getting in, this would be late. But second, Mike just pointed this out, we're trading up near the highs from May, so we're coming up to a resistance. This isn't the place to trade it. The place to trade it was to recognize this over the weekend and be ready to trade it on Monday. I pointed it out in my market insight over the weekend. So this is the stuff that you want to watch for, those retracement areas where we're not buying into things that are overvalued and extended. Bob's asking, do I like day trading? When it makes sense on the chart. In the summertime, I probably do more day trading than any other time, just because the markets have a tendency to get choppier. Earnings season, we have a reason to do some day trading. Generally, I like finding stocks that are, in some kind of a trend, or at least swing trading, where we get these momentum pushes for 2, 3, 4, 5 days or so. Just because there's more money to be made there. But when the markets, if they're slowing down and if they're choppy, and if you have a company announcing earnings, you can't hold on that long. That's when day trading can make a lot of sense. All right. Yeah, Darla's asking, do the averages and things make a difference if your stock is pricey or low cost? It will work the same regardless. And that's what makes this nice, is that this stuff is transferable, meaning you can apply it to different types of stocks and to different markets. Anybody trade, currencies? Got other markets out there that you could trade, and you could trade it right off the charts, and those moving averages absolutely work. Oh, Christine, that's awesome. She said, I love your trend trading videos. I learn something new every time I watch them. Very cool. And that really is a place to go to really hash out the different charting patterns, right? Really get that down. So cool. Thank you. All right, well, guys, I've gone way over time, but thank you for hanging out with me. I wanted to just spend some time and show you some of these charts. Don't forget, we've got Amelia ready. If you guys are ready to sign up for the class with Jane and I. It's in Orlando, August 4, 5. Don't forget, because it's just over 2 weeks away. I know August gets busy, but I tell you, this will be worth your time. It's going to be an investment that not only are you going to get the charting and the trading practice and experience, but you're going to have some really solid, profound insights that nobody could bring you other than, I think, somebody like Jane, who is a trained licensed psychologist. She's got 3 doctor's degrees. She's brilliant, fun and entertaining to talk to, but also has something that a lot of people don't. She has that experience of being a trader and understanding the emotions that we all go through as traders. All right, so don't miss that. Like I said, we'll honor that $9.95 price for today. So give Amelia a call and we'll get you signed up. There you go. Yeah. Even Amelia's here talking. She's saying her point is this class will be a game changer. You're right. I mean, this really is. That is the point of this class, to take you beyond where you are now. And I think you find with anything, I don't care what your career is or your whatever it is you're doing, you hit these plateaus. You ever feel that? Where you kind of get to a point and you hit a plateau and you're just not seeing progress. This is that kind of a key event that can help you break out of any plateau that you may be in and get you to that next level. That is really, really important. We all hit it, and this is why Bill and I continually remain students of the markets, because things just can change. Just you yourself sometimes are your worst enemy, right? And so we all go through that, where we go through periods of growth and then periods of kind of plateauing and stagnating a little bit. This is that event that will kick you to the next level and get you going. Really, really will. So I think you're going to find huge benefits from this. It will be a game changer, no doubt about it. So I can't wait to see you there. In the meantime, I'll also see you guys tonight in the Traders Talk. How's that? So yeah, Mike, I love it. I can't wait to see you in a couple weeks in Florida. Yeah, there we go. So you guys have a great trading day. Look for some of those breakouts this afternoon. I'll be working on my Bollinger Band pinching page here, see if there's anybody else pinching that I want to add into the list. I'll send out an alert, let you know who I'm looking at for this afternoon. Yeah, and then I will see you guys online in the Traders Talk. And I think, yeah, I'm just looking at my schedule. Really, this is what I have for the rest of the summer as far as live events, is this August Jade and I event. So other than that, you'll see me here on Tuesdays. Listen to me in the Market Insights and the Traders Talk on Tuesday, Thursdays as well. All right, thanks everyone. Appreciate you hanging out. Oh, SWKS just broke down, which it needs to. There we go. Pushing below the lower band, breaking right down. It's right at the very lows of the morning. And you know what? This is what it should be doing according to the daily chart, right? So with the daily chart like this, overextended, if you are trading this, you want to do it more on short-term bearish type of a trade, as this does pull back and hopefully retraces near moving average. So we've got maybe an entry near, maybe bullish entry down the road. All right, thanks guys. You take care, and I will see you online tonight and in Orlando. Don't forget. All right, thanks everybody. I'll see you later.